I don't think, however, that what we should be expecting is silver becoming remonetized. History showed that the right relationship approximately between gold and silver, when silver was also money, monetized, I should say, was around about 15 to 16 to 1. I don't think we're going to get there. But what we could see with a failing fiat system, which after all is what the gold price will be telling us, is that you could see the gold silver ratio moving down on that sort of twice times relationship. You could easily see silver, I think, falling to 50, 40, maybe, 30, depending how it.
Silver prices have been on a tear in recent months, rising more than 50% year to date. This outperformance is due to economic and geopolitical uncertainty and the increasing use of silver in industrial applications. Alasdair Macleod, a renowned analyst and head of research at Goldmoney, believes a strong correlation exists between the prices of gold and silver. This means that when the price of gold goes up, the price of silver will also increase. A substantial increase in gold's price could potentially lead to a crisis in the silver market, driving its price even higher. This is because silver is often seen as a cheaper alternative to gold, and investors may be more likely to buy silver when gold prices are high. However, the increase in silver's price is usually slightly less than twice the increase in gold's price on average. Conversely, when the price of gold declines, silver tends to suffer a more significant drop, sinking twice as much on average. This pattern suggests a certain level of synchrony between the two metals. The gold-to-silver ratio measures the value of gold relative to silver. The ratio has been historically volatile, ranging from as low as 15 to 1 to as high as 150 to 1. The ratio is currently around 70 to 1, meaning that 1 ounce of gold is worth about 70 ounces of silver. In a recent interview, Macleod expressed skepticism about reaching that ratio again. He believes that in the event of a failing fiat currency system, the gold-to-silver ratio could shift based on the relationship above. Now let's watch excerpts from Alasdair Macleod's interview with Silver Bullion TV. But before we proceed, make sure to watch the entire video and consider subscribing to our channel. Don't forget to enable post notifications to stay updated on our latest uploads. Thank you, and enjoy the video.
The market relationship, I've just said how the markets are rigged and all the rest of it, but there is one relationship which seems to work, and that is that if gold goes up, silver goes up just slightly less than 2 times on average. If gold goes down, silver sinks twice as much on average. So if you expect gold to go back up over 2000, maybe to new high ground, whatever, then silver. If you're a punter, the way to play it is actually in silver, because if gold goes up 10%, it'll go up 20%, and it could actually even create a crisis in the silver market, which might drive even higher. So yeah, it's a pretty good play. If you're just interested in not so much in the monetary side, protecting yourself by just getting out of credit entirely, if you just want to play the game, then silver could actually be quite an interesting thing, because so you've got the industrial demand situation on the one hand, and the mispricing in the market, because everything is being sort of shuffled through, and it's only at the margin that people, the industrial boys are actually buying the stuff, on Comex or the LBMA or wherever it might be. Could be a very good play in the industrial side, and then when speculation really begins to hit the silver price, you'll be hearing people talking about it's money, it's the poor man's money, you got to have it, and so we've still got all that ahead of us. We're nowhere near there yet, but I would expect it at some stage, certainly. What Goldmoney does is that it stores physical gold and silver. It has a dealing facility, so you can buy and sell the stuff, and also platinum group metals if you're that way inclined. But we store it in various LBMA recognized vaults, fully insured around the world. It doesn't go on our balance sheet. It's a custodial function, so it's very definitely yours. And it's frequently audited and so on and so forth. So this is secure holding, if you like, of your gold and silver. And I think it's desperately important, because while I would strongly recommend you have some gold and silver liquidity, if, let us say, we have a fiat currency failure, I think to have the bulk of your wealth beyond the easy reach of your government in secure vaults elsewhere in the world is something that many people will be considering.
Macleod believes there is a need for more silver because of how it has been behaving in the market. The price of silver has been rising sharply, but the supply of silver needs to keep up with demand. This has led to a silver shortage, making it difficult for bullion banks to close their positions. When silver prices rise, bullion banks can make money by selling their silver and buying cash. However, if silver prices fall, they can lose money by buying silver and selling currency. Bullion banks often use swaps to lock in a price for silver at a future date to hedge their risk. However, the silver shortage makes it difficult for bullion banks to close their swaps. This is because there is not enough silver available to meet the demand. As a result, bullion banks are being forced to pay higher prices for silver, further driving up the metal's price. Regarding silver stocks, Macleod highlights that industrial users might store their silver in secure vaults until they need it. This explains why silver disappears from the market. Macleod also emphasizes deliveries through exchanges like COMEX, suggesting that the industry is drawing down on stocks. He found the situation exciting and, like many others, predicted a significant upward movement in silver's price in the future.
The way silver has been behaving quite clearly is there is a shortage of silver around. I think that the swaps in particular, who are mainly the bullion bank trading desks, having great difficulty closing their positions. They managed to get their go net long not so long ago, but that position is eroding quite rapidly. And I think they're getting a bit worried. They must be getting a bit worried. I mean, these are proper traders, these guys. They know more or less what they're doing. And I mean, the thing about silver is we're not talking about monetary demand. I mean, you and I would probably think in terms of monetary demand, but actually, just look at the industrial demand. I mean, China's plans for manufacturing solar panels and I don't know, all the electronic kit and so on. Quite a lot of silver goes into electric cars and, I mean, air conditioning, the lot. I mean, there's the demand for silver is going to outstrip available stocks very, very quickly. And so I find it very hard to produce a bearish argument for silver. It's in the same, if you like, category as lithium, copper in that sense. I mean, last year we saw lithium go up, 10 times or something. I mean, silver didn't budge, really. And so it has, I think, been left behind. Copper is slightly different because that's such a huge market. I mean, it really is. And you've got copper stocks around and so on. So, there is an emotional thing. We've seen Chinese post-COVID growth appearing to stall. Of course, China is such a huge, it's the largest consumer of copper by miles. So on that basis, you can see that, there's some doubts over the future of the copper price. But silver, I think has got everything to play for. I mean, and the other thing is when you look at the stocks in, the London Metal Exchange, not so much that, but the LBMA, and I think also the COMEX vaults. I mean, if I was a user of silver in the industrial sense, I think I would leave my silver in those vaults until I need it. So the stuff, I think, just disappears out of the back door. It's not a question of suddenly people, buying it, and it's actually the current owners take it out because they need it for manufacturing. What better place to store it than in a secure vault? And I think quite a lot of what we see, and you've also got deliveries through COMEX and all the rest of it. And I think it's it's industry drawing down its stocks. It's got its stocks sitting, if you like, fairly close to the exchanges. So,
The correlation between gold and silver prices suggests that a rise in gold prices could lead to even higher silver prices. Despite historical patterns showing silver's price increase slightly less than gold's, the scarcity of silver in the market and the struggle of bullion banks to close their positions indicate upward pressure on prices. Do you believe that silver prices will continue to rise in the future? Share your thoughts and observations in the comments section below. If you found this video helpful, remember to give it a thumbs up, subscribe to our channel, and turn on notifications to stay updated on our latest videos about silver, gold, and copper. Thank you for watching.